What's up guys, it's Alex. In this video I'm going to show you exactly how you can make money trading Burlington earnings tomorrow. Guys, this isn't some bullshit video where I'm going to say, hey, you could do this, you could do that. No, I'm going to give you a definitive conclusion on exactly how you can profit off of this thing tomorrow. So stick with me, I'm going to give you all the information you need. And if you like videos like this that help you profit, help you take high probability trades, this is the channel for you. Make sure you're subscribed, and we're not going to waste any time. We're going to go ahead and get straight into it. So what are we doing? If you're new to the channel, we like to base our trades off statistical probabilities, off historical data. And so we're going to go over the last 6 earnings reports for Burlington and see exactly how it reacted. Okay, so these are the 6 earnings reports we're going over, and we'll show you exactly how to trade that. Okay, so stay with me here. It's going to be super important you look at all these examples so you can get the confidence you need to trade this tomorrow. So August 27, 2020, they release earnings. Okay, what happens? What is your best entry? Calls at the open. You can see this here. You buy calls at the open. You get about a 10 plus point move to the upside. That's about 11 points. Okay, and so keep this in mind. 11-point move to the upside, total DTR 14 for the day, no gap up. All right, so it doesn't really gap up, doesn't really gap down, just barely. So we're going to consider that no gap. Okay, that's our first example. Once again, if you're a little lost, you're new to our process, just stick with me. It's going to make a lot of sense here if you just give me a sec, okay? Second example, May 28th, 2020. What is your best entry on earnings day? Calls at the open. You can see this. Calls at the open or on a tiny, slight little dip here. Okay, what do you get? An 11-ish point move to the upside. Look, from about 210 up to 222.5. That's about 11, 12 points. Okay, so once again, calls at the open and an 11-ish point move to the upside. That's exactly what you had here in this first example, was an 11-ish point move to the upside from the open. Okay, so you got two basically identical examples. Now what I will say is, look at this. The pro move here in this scenario would be to reverse into puts. Reverse ITP is our abbreviation there. Okay, you can see that there. If you catch the top, you reverse into puts, boom, you actually get 16 points from 222.5 down to 206 within the next 2 days. So that would be the pro move there. Okay, but let's go through some more examples so you can decide what you want to do. Okay, March the 3rd, March the 5th, 2020, what happens? Calls at the open is once again your most profitable move. Now maybe you're a beginner, maybe you're not sure. Okay, the thing actually ends lower for the day, and I'm saying that calls at the open is your most profitable move. Okay, yes, it actually is. Okay, so you open here at about 218. Okay, then the thing goes all the way up to about 227.5. Okay, and then it comes back down for the day and ends here. So yes, once again, your best move was calls at the open. You get about a 9-point move to the upside, so 10-ish point move to the upside. Once again, matching very well with this 11-point move to the upside we had in both of these previous examples, as you can see. So once again, your pro move is calls at the open. Once again, your pro move, okay, is reverse into puts at the top if you can time it, right? Once again, you get 2 bearish days following the earnings day. Okay, so that's huge if you can time that, but let's go through some more examples here. November, okay, what actually happens here? Once again, your best entry, calls at the open. This thing just skyrockets at the open, and this is actually going to be our outlier case, but it's actually going to be a very positive outlier. Why? Because you get a 20-point move to the upside from open to close. You see 207.5 to about 227.5. Really, it hits 230 for the day. So that's like, a 22.5-point move to the upside, guys. If you catch that, you're going to be extremely happy by the end of tomorrow. Once again, what is your pro move? Reverse into puts, right? If you can time that top, okay, what do you get? Negative bearish price action for the following days as well, 2 days after, and really more if you consider that. But this is a kind of small DTR bearish price action compared to these other days. We had a larger, bearish price action, okay? So once again, every single example we've went over so far, the day of earnings, calls at the open has been by far your most profitable strategy. Once again, you're noticing in all these examples, you're getting no significant gap, okay? So it's 4 out of 4 examples, basically the same exact scenario. Calls at the open, you get a 10-plus point move to the upside. Your pro move is reversing into puts, and you get no gap. This is crazy how identical these all are pretty much. Okay, let's get into the next example here. This is our first gap up, guys. Every single other example, you had no significant gap at all. Okay, in this case, we actually gap up. Still, guys, nonetheless, calls at the open is still your most profitable entry here. As you can see that from top to bottom, you go 195 to about 205, 206. So once again, a 10-ish point move to the upside. How incredibly consistent is Burlington after earnings these last times, okay? Once again, your pro move, reverse into puts at the end of the day, right? If you can time that, once again, you get that bearish price action for the following 2 days, okay? Holy moly, this is consistent, isn't it, guys? Let's get into the last and final example. This is the 6th example, and this is our one example that does not work well with calls at the open. You can see here, your best strategy is going to be puts at the open or on the bounce, okay? You can see that here. It opens right here, okay? Goes just a little bit higher. So if you had calls, you might think you're winning, but the thing only bounces 2 points and then boom, reverses down for that bearish price action for the next 2 days, as you can see. Okay, so only a 2-point move to the upside with calls at the open here. Okay, but that's 1 out of 6 cases you lose. And that's a super low DTR day, so it's a pretty much an outlier too. DTR of only 8 points from top to bottom, but this would be a short to bounce scenario, which I think we're all very familiar with. Okay, so I think you can see the incredible consistency here of calls at the open being your primary strategy out of the last 6 earnings reports. Okay, so look at that. 5 out of the last 6 times, you get a 10+ point move to the upside. So it's not even like 5 out of 6 times you went up. No, it's 5 out of 6 times you went 10+ points. That's pretty damn significant, okay? 1 out of 6 times the calls did not open, and that's this example here. And here's the best part about this example is this is the farthest example from our current time right now, okay? All these examples here are much closer, okay? This is the farthest example away from our current time, so that's definitely good. Okay, but you can see if we didn't even look at the 6th example, which is this one here, you'll see the previous 5 earnings reports, Burlington has either no gap up or gap up, but basically your calls at the open is your best strategy, and every single time you get a 10+ point move to the upside. Okay, do I need to show you? Just in case, let's show you real quickly, right? Calls at the open, 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 okay? 5 out of the last 5 times, and then if we're counting that 6 times, then 5 out of the last 6 times. Okay, now all 6 of these examples, guys, you get bearish price action post earnings day for the following 2 days at least. Okay, so that's pretty huge because that means you do have the capability to reverse into puts after you catch the top. Okay, so what is our conclusion? What is our probabilities? Okay, you have an 83% chance to win by getting calls at the open. I don't know about you. 83% chance is pretty damn high, and so this is definitely a great trade we have set up here. Okay, 100% of the time, bearish price action post earnings day for the following 2 days, and we're expecting a finish higher by 7.63%. Now, I didn't put the percent closes here on the earnings day. Just trust me, I have it all in my notebook, super messy, super filled with data. I try to minimize it and make it as simple as possible for you here, but we've got tons of statistics and numbers written in my notebook, but this is basically what you need to know here. Okay, 83% chance to win by getting calls, 100% of the time bearish price action post earnings day, and expected finish higher by 7.63%. Now, what I will say about this expected finish higher of 7.63% is that you had that one outlier case of where it actually went up 20 points. Okay, so that's a significant, difference compared to these 10-point moves we're typically getting. So our expected finish, I'm going to lower that. This is the statistical probability, but going off a little bit of common sense and understanding that that was an outlier case, we're probably going to track for a 6% move higher from the open. Okay, and so most of the time this thing doesn't gap up or down, really just kind of opens where it closed the previous day. Okay, so let's look at this thing currently. Okay, so this is the chart here, and it's so damn bearish, guys. We're not going to go over, the factors here, but what I am going to go over here is our expected finish higher is 7.63%. Now, remember, we had that outlier case where it actually shot up like 20% in one day, so I'm going to exclude that one. Or we're not, well, that 20% move higher is included in this, but I am lowering my expectation a little, if that makes sense. So we're just going to say 6% move higher to be a little modest here, right? And so if you put this in the calculator from the close of today, 230, if we move up 6% from 230, guess where that puts us, guys? 243.8. Now, where's 243.8 on this chart? It's literally the top level here, which is fucking beautiful, guys. I mean, I don't think we've ever had a trade line up this perfectly where we have such a high probability and our actual data, we plug it in and it literally perfectly matches with the top level here on Burlington. So you know what my strategy is, I think, at this point. I think you know what your strategy should most likely be. Okay, it seems that our best scenario here is going to be calls at the open. Okay, we're going to shoot up to 243. Okay, after that, reverse into puts on the way back down. Now, this thing can easily overshoot just a little past, right? It doesn't have to be exact, but we have such a damn good, baseline to go off of, right? So this is incredible. You guys know, if you've been around on the channel, every single earnings play we've backed statistically has literally won. Okay, I think we've nailed like 4. What was it? Lennox International, Netflix, BlackRock, and Amazon. Okay, so we haven't done one in a while, but every single time we've nailed them. Everybody has won every single time. So, if we're gonna go off those probabilities, we were 4 for 4 on statistical earnings plays. Hey, this is the 5th time. That's a little scary because we've won every single one so far. The more times you win, the higher the chance you get of actually losing. Okay, but I think we continue the streak here with the earnings plays based off statistical data we've proven. And I think we continue the earnings streak here. Go 5 for 5 so far this earnings season. We hit 243, short it. I think that's the plan as of now. Obviously, be able to just be ready to adapt tomorrow. And you know what's going to fucking suck is what if this thing just gaps down tomorrow? I mean, how stupid would that be after we've done all this data and everything, and this thing hasn't gapped down a single time in the last 6 times, right? But let's just say that happens. That's gonna fucking suck, alright? I mean, I got no idea what to tell you at that point, right? But we've done our part, we've done everything we can control, and we know our highest probability to win is gonna be calls at the open, and we can easily reverse into puts by the end of the day after we set that top. So guys, that is the play. Okay, I think it's by far our most accurate earnings play going into that day. I don't think we've had any play line up this significantly or this accurately, so I think this is incredible. I think it's up to you to take the trade, right? I mean, I know I will not be mad if we lose this trade because I know we have the highest probabilities. We've done our work. Okay, we're not lazy. We're not going off news. We're not going off someone's opinion. We're going off what's the most probable thing to happen. And so with this chance to win, I will gladly take my damn loss if it comes to it. But obviously, we know we got a very high chance. So at the end of the day, only put how much you're willing to lose into a trade. Make sure you're able to adapt. Obviously, you guys know I'm trying to help you as much as I possibly can. So if you got questions, you can reach me in the comment section below. You can go sign up for our weekly trading plan, which is linked in the description. And then lastly, you can follow our Twitter, which is literally for you guys to update you if I can there during the day. But guys, this is just a phenomenal trade. I hope you guys are excited as me. I hope this all lines up as much as it is, in my eyes, right? I mean, I just went over it. I think this thing lines up perfectly. I think you should be able to see it, but, not everyone sees eye to eye. But let me know, are you seeing what I'm seeing here? And are you excited for this trade? I think we got an incredible win rate, an incredible chance to win. And like I said, it's such a bearish chart. Okay, and so when we hit that top level, very unlikely to break through or break through very significantly, which actually leads to back to that bearish bias of this chart. Like this is, as bearish as the chart gets. Alright, so guys, at the end of the day, we've done everything we can to make sure we have the highest chance of winning. And so at the end of the day, if we lose, we lose. I can personally live with that. Okay, so at the end of the day, it's your hard-earned money that you're trading with. So just make sure you're obviously okay with the risk there is, which you got minimized risk here. You got like a 70% chance to lose. You got a very high probability to win. You got a round-trip trade to the upside and downside most likely tomorrow. And I'm super pumped for it. Okay, so guys, if you found the video useful, you like videos like this, make sure you're subscribed and have your notification bell on, because what if I keep you updated? What if something happens tomorrow? I don't want you to miss out and then go into this and blindly trade it. Okay, so lastly, we have a Twitter as well down below that you can also go and follow, and I just use that to update you throughout the day if I can, but I'd rather you come back to the comment section and leave me any questions you got there, because I'll definitely be able to see that quicker. Okay, so guys, obviously any way I can help you, I will try my best, and that's our plan, that's our trade for the day, going into tomorrow. That's how you trade Burlington earnings. Alright, so if you enjoyed the video, drop a like if you haven't already, and we will see you guys on the next video. Bye guys.